Hey guys, Tax Attorney Joshua Sells here. Another daily episode of Tax Law Guy. Just our quick daily tax updates. Really quickly, I want to talk a little bit about the interest rate, the IRS interest rate on payment plans. We do get a lot of questions about this from our clients and whatnot. And so we want to talk about if you owe a back tax to the IRS and you have an installment agreement or a payment plan set up with them, the IRS does charge interest. Okay, and so that interest is accrued and ultimately assessed against not only the underlying tax, not only the penalties, but also the previously assessed interest as well. So whatever your balance is to the IRS, all three of those things included, interest is assessed, it's compounded daily, and so that rate, the interest rate for IRS payment plans is currently at 7%. So that rate is adjusted quarterly. The last rate adjustment was announced May 2023, and that was the rate that's in effect for this quarter as we're going into the, or actually are in the third quarter. So those rates can change quarterly. They often do, but that rate is pegged to the AFR, or the federal rate, plus 3%. So currently we're at 7% for IRS payment plans. That's what the rate is if you owe back tax to the IRS. Now this does not include penalties. The IRS will continue to assess the failure to pay, and they ultimately do assess the failure to file penalties as well. So those can add up as well over time. But talking just about the interest rate on payment plans, we're at 7%. So right now what we're seeing compared to the housing industry, again, for a 30-year fixed loan, you're right around that 7% as well right now. So sometimes there's an opportunity to look at whether it makes sense to get a home equity loan to pay off back tax if that is available to you, if you otherwise don't qualify for any additional tax relief options, of course. But right now it doesn't seem to really matter as far as the interest rate, because we're seeing comparable rates from home equity loans, from mortgages, cash out mortgages, refinances. They're very similar right now to the IRS interest rate. Now there may be a possible play there as far as if you do tap into a home equity loan, there may be some deductibility there. Again, you'd have to source the interest as far as to an actual house project, a home improvement potentially, and then maybe use other funds to pay off the IRS back tax. But there certainly are some benefits to paying off the IRS back tax and then using a loan such as a home equity loan in its stead. So again, right now we're at 7%, and to answer the next question that always comes up, can I get IRS interest removed? No, you cannot. IRS interest is not an item that can be abated. Statutorily, that's not allowed. So the only thing that you can have abated would be penalties if you qualify for penalty abatement. Of course, we've talked about penalty abatement before. We have several videos on that, but IRS interest cannot be abated. However, if you do something such as an offer in compromise, that absolutely is included in an offer in compromise, a tax settlement. So it could be removed that way. However, interest in and of itself is not something that can be removed. If you do get a penalty abatement, though, the interest that has accrued and been assessed on the penalty would be removed. But interest in and of itself is not something that would be removed. All right, so 7%, the current interest rate. That will be updated here. They'll likely be announcing the fourth quarter interest rate as we go into September. Of course, it's August now, but as we go into September, that new interest rate will be announced. We expect that interest rate is going to increase with the recent downgrade of the U.S. by Fitch. We do expect that interest rate to increase as we go into the fourth quarter. So if you do have a back tax situation, give us a call. We can definitely talk about that and explore your options. All right, thanks for watching Tax Law Guy. We'll see you tomorrow.